Now, tensions are running high in the ongoing trade war between Washington and Beijing amid reports that China will not respond to threats on tariffs. But in a commentary published on the People's Daily's WeChat account, it says that the U.S. should not even think about trying to get more concessions.
It comes just days after President Trump threatened to raise tariffs on $200 billion worth of Chinese goods. But despite the hardline stance, a Chinese delegation led by a top trade negotiator, Vice Premier Liu He, is set to return to the negotiating table tomorrow. Olivia Xiong with more from Beijing.
China's top trade negotiator, Vice Premier Liu He, and his delegation will make their way to Washington on Thursday for the 11th round of trade talks with the United States in hopes of finding a solution to end the ongoing trade war between the two countries. His trip, however, has been cut short from 3 to 2 days after the U.S. announced new plans this week to raise tariffs on $200 billion worth of Chinese goods on Friday. A surprising turn of events as the deal seemed to be on the cards in recent weeks until news broke on Sunday night. U.S. President Donald Trump issuing a tweet saying negotiations were moving too slowly as China sought to renegotiate the deal.
Both parties have gained this new confidence because the Q1 economic performance was quite strong for both the U.S. and China. We actually think President Trump's tweet reflected this lack of consensus among China's top leadership. So if his comments are accurate, that means there are things that President Xi Jinping would not like to compromise, even if his advisors think he should.
Some of these sticking points could include U.S. demands to change China's industrial policy and subsidies for its state-owned enterprises. The U.S. has also been calling on China to open up market access, address intellectual property rights, and forced technology transfers. Reports suggest that China had backtracked on earlier agreements to change Chinese laws on a range of issues. But analysts still think a deal could be made, even if it may be limited in nature. That's because a breakdown in talks could drag on both the Chinese and U.S. economy.
If the U.S. signed into this deal with China and at some point along the way it decides that China is not fulfill its commitment, it's breaking the rules, it could always use this enforcement mechanism to reimpose tariffs. But if the trade talk collapse now, then the U.S. basically lose all its leverage, and that would be very unwise to do.
But even if a deal is struck, analysts say this would not be the end of the rivalry between China and the U.S. Competition has moved into the technology sector and influence over other countries, and this competition could go on beyond 2020 or even continue for a decade to come. Olivia Xiong, CNA, Beijing.